The buzz around Roths, Roth conversions, Roth accounts as a tax planning strategy for retirement, it continues to be a hot topic. But specifically today, talking about Roth conversions and does doing one make sense for you is what we're going to ask Frankie Guida, certified financial planner, president of A Better Way Financial. I'm Heather Branch here to walk through some of this info with Frankie today. Speaking specifically, as I said, the pros and cons of doing a Roth conversion. Frankie, let's just baseline it though and explain in layman's terms. If you were talking to a 12-year-old and they said, Mr. Guida, what is a Roth conversion? First of all, you'd probably say, Mr. Guida is my dad, so don't say no, but what is a Roth conversion? Just in a sentence or two.
A Roth conversion is moving money from your traditional IRA or from your traditional 401k into a Roth IRA. Okay. At its basic principle, that's what you're doing.
Let's start by listing out some of the pros of a Roth conversion. And number one, that tax-free retirement income opportunity. Let's just go ahead and say this also. These are rules that apply as of today, this recording that we're doing in July of 2026. Because as we also always know, the laws and the rules continue to change. But starting with number one, that tax-free retirement income.
Yes, that's a huge one. Tax-free retirement income. That is why you do the Roth conversion. If it wasn't for tax-free income, nobody would be doing Roth conversions. So that's the primary reason why you do it. Another big reason is there's no required minimum distributions. If you leave the money in the 401k pre-tax or in your IRA, the government forces you to take that money out either at age 73 or at age 75 and have to pay the taxes on that every single year during the rest of your life. And then when you pass away and give it to the kids, then they have to pay the taxes on it too. With the Roth, the way that it's set up, you don't have to pay any taxes on that money after it's in the Roth already, and neither do your kids. And you don't get forced to have to take that money out at any point in your lifetime. Another advantage is if we feel that the tax rates are lower today than they're going to be in the future, we can have that as a hedge against tax rates going up. So if tax rates go up in the future, we paid the taxes today at a lower rate, well, then we did a good thing because now we locked in this lower rate for taxes instead of future higher tax rates if they do go up in the future. And so that's another advantage. And tax diversification. So a lot of people have all of their money or a very large sum of their money in just pre-tax traditional IRAs and traditional 401ks. Having a Roth can give you more flexibility to be able to take that income out from either account instead of having to take it out from the 401k or from the IRA where you have to pay the taxes. There's certain subsidies out there and programs where if you can keep your income lower, you don't have to pay for certain things. And so if you were in that situation, you wanted to keep your income lower and you have a Roth bucket of money to take from, it may behoove you to be able to take some of that income out of there. And so having that diversification can be advantageous as well as the legacy benefits, the estate planning benefits. So not only do you not have to pay taxes once it's in that Roth IRA, once it goes to your kids, they can actually extend it for another 10 years tax-free. They don't have to pay any taxes on that money for 10 years, and then they can take it out tax-free at that time. Whereas if you left it in the IRA or the 401k, the kids would have to pay the taxes on every single dollar that they take out of there. And so this can be a huge advantage for people who are considering doing those Roth conversions.
The pros, at least some of the high-level pros that we're working through today. 1, tax-free retirement income. 2, no required minimum distributions. 3, you're going to hedge against potential future tax increases. We also have the tax diversifications, offering more strategies than the estate and legacy planning. All right, so those are some high-level benefits. As you were just getting ready to say, to every yin there's yin, Frankie. Let's talk about the cons.
I know, it's not all, great stuff with the Roth too. There's also things to look out for, traps that you want to avoid. And it's why it's so hard to do this on your own, trying to figure out, well, how much should I convert? What is that magic number? A lot of things are stacked against you. One of the cons is you have that immediate tax bill. So right away, you have to pay the taxes on that amount. And if you don't have that money set aside, this can be a concern. This can be where am I going to get this money from once I do that Roth conversion? So it's important that if you do that conversion, to have a plan of how you're going to pay those taxes. And so if you have extra cash in the bank, well, that could be a great starting point. If you have extra cash in an after-tax non-qualified account, that would be a great next point to go. If you have money in the IRA and you're over 59.5, well, you can withhold right on the conversion. If you're under 59.5, though, you don't want to withhold on the conversion, because if you withhold on the conversion, now you're stuck paying a 10% penalty on that money that you withheld. And so you want to really make sure that you're doing this right. What you can do is you can convert it into the Roth and then take that money out of the Roth to pay the taxes and thus avoid that 10% penalty. Okay. So there are things you can do, but having people who are knowledgeable in this field to help you so that you're not trying to figure it all out on your own can really help. Another con is it's not ideal in high income years. So if you're earning 300, 400, 500,000 this year, it may not be the best time to do a Roth conversion, especially if when you retire, you're only going to be earning around 100,000 or 200,000. What we do is we look at not only this year, but the rest of your lifetime, the next 20 to 30 years, to see what does it look like? Where are we at? Are we going to have higher taxes in our retirement? Or are we going to have higher taxes now while we're still working? And if you're still working, we're going to look at that and see, does it make sense to do a Roth conversion now? Or maybe it might make more sense to do it once you retire and once that income is lower. So not always does it make sense to do a Roth conversion, even if at some point in your life, it still may be better to. So this is why you want to have those numbers looked at and see, all right, well, is now the right time or is it not the right time? Some of the other things here that you want to consider is, where is that Medicare IRMA tax bracket at? So if you're over $109,000 single, or you're over $218,000 as a married filing joint couple, that can be another disadvantage. If you go over those thresholds, now you're paying more for your Medicare if you're over age 65. Also, if you're over age 65, considering a Roth conversion, they passed that One Big Beautiful Bill Act, which gets you an extra $6,000 to $12,000, depending on if you're single or if you're married, and you're under certain income thresholds. Those income thresholds, if you're married, is $150,000 to $250,000. So if you do a Roth conversion, that adds to your income base for that year. And so if that pushes your income up above those thresholds, then it can reduce your standard deduction as well that you get with OBA.
So when somebody who's watching this video, listening to this podcast, is thinking about obviously making a Roth conversion, let's do some just quick high level. When might a Roth conversion make sense for somebody? What are areas of life and phase of life?
Definitely for a lot of people in their younger years. So if you're in your 20s and your 30s, your income is projected to go up substantially over the course of your working career, well, then that's a great time. Also, any temporary low income years. If you're in a position where maybe you lost a job, so you don't have that work income and you're living off of savings, well, that could be a good time to do a Roth conversion. If you're structured in a position where you retire early, so you decide, all right, I'm done working, I'm ready to retire, I'm going to retire maybe at 60 or 55 or earlier than you traditionally normally would, before Social Security and before required minimum distributions, your income could be really low, especially if you're living off of savings or after-tax monies, because that's not going to count in the full amount towards taxes. So you have an artificially low income tax bracket to be able to fill some with those Roth conversions. If you have an expectation of higher future tax rates, so if you believe the taxes are going to go up in the future, well, then that means that it could be a good time now to lock in what you believe could be lower tax rates. Desire for tax-free retirement income. So if you don't have two tax buckets, you have it all in a pre-tax bucket, and you want to get some of it tax-free, that can be a good time to do this. And if you have estate planning objectives, if you're looking to leave these funds primarily for kids or grandkids or as a legacy, a Roth is an excellent vehicle to do that, because they don't have to pay the taxes on it when they inherit that money, and can actually let it grow another 10 years tax-free. So this can be a really powerful tax planning move, but it's not a one-size-fits-all. It's not I can give you blanket advice over a video call or over a YouTube video. There are certain things that you want to have looked into. You want to be able to use financial planning software to figure out what is the pro of doing it, what is the con of doing it, where am I specifically at for my personal circumstances, and just evaluating what are those tax consequences. How does this conversion fit into the overall retirement plan? And if you'd like help determining whether a Roth conversion is appropriate for you, or if it makes sense in your particular circumstances and situation, reach out by visiting our website, abetterwayfinancial.com, or click on the link below.